It's official, Bitcoin has smashed through the $100,000 barrier and is now trading at $123,000. The crypto world is in a frenzy, and financial news everywhere is leading with this story. This isn't just another pump, it's a milestone that's electrifying the entire market. For long-term hodlers, this is the payoff after years of holding through doubt and downturns. Bitcoin is now a globally recognized asset, with institutions and even countries taking it seriously. The big question, is this the peak, or just the start of a new chapter? Stay tuned as we break down how we got here and what could come next. So how exactly did Bitcoin manage to rocket all the way up to $123,000? What were the key ingredients in this unprecedented surge? It's not just one thing, but rather the result of a perfect storm, a confluence of events all happening at the same time. First, the highly anticipated launch of spot Bitcoin ETFs in early 2024 opened the floodgates wide for institutional money to flow in, creating a massive influx of capital. This made it significantly easier and more appealing for big players like hedge funds and large financial institutions to finally invest in Bitcoin. Then, we had the 2024 Bitcoin halving event. This crucial event slashed the rate at which new Bitcoin was entering circulation, effectively creating a classic supply shock where demand far outstripped the available supply. Meanwhile, many central banks around the world have started to shift towards a looser monetary policy stance, pushing investors to seek higher returns in riskier assets, and Bitcoin, with its potential for significant gains, became an increasingly attractive option. Bitcoin's inherently fixed supply has solidified its position as the go-to hedge against the ever-present threat of inflation, and the ongoing concerns surrounding currency debasement in various economies. Furthermore, increasing regulatory clarity in major markets around the globe has played a crucial role by removing previous barriers and paving the way for even greater institutional adoption. All of these factors combine together to create the perfect environment to fuel this truly explosive rally we've witnessed. The stage was perfectly set for a monumental surge, and Bitcoin certainly delivered on that promise. To truly appreciate the magnitude of Bitcoin reaching $123,000, a price point that once seemed like a distant dream, you have to remember Bitcoin's wild and often unpredictable journey. It's a story filled with dramatic twists and turns, unexpected surges, and disheartening dips. Understanding this history is key to grasping the significance of this new milestone. From its humble beginnings, trading at just a few cents in 2010, when it was more of a novelty than an investment, to the now legendary story of the first real-world transaction, a pizza purchase for 10,000 Bitcoins, Bitcoin was frequently dismissed as a mere fad, a fleeting trend destined to disappear, and not a serious contender in the financial world. The explosive 2017 bull run dramatically changed perceptions, briefly catapulting it to nearly $20,000 and capturing mainstream attention. This meteoric rise was followed by a brutal crash in 2018, sending it into a prolonged bear market, a period of uncertainty and doubt for many investors. Then, in 2021, fueled by institutional adoption and renewed retail interest, it soared to a new all-time high of $69,000, only to crash again in 2022, amidst broader economic concerns and crypto-specific scandals. But each cycle, despite the pain, brought more dedicated believers, technological advancements, and a more robust ecosystem. Now, reaching $123,000 isn't just a new record on a chart, it represents something far more profound. It's a doubling of the previous all-time high, a testament to the sustained growth and increasing maturity of the Bitcoin network. This remarkable feat is a powerful demonstration of Bitcoin's resilience in the face of adversity. Every crash, every period of doubt, has ultimately served to strengthen the network, making it more secure and more resistant to future shocks. Breaking through this significant resistance level effectively silences many of the remaining doubters and skeptics, and it further cements Bitcoin's position as a legitimate store of value in an increasingly uncertain world. The journey to this point has undoubtedly been wild, characterized by extreme volatility and emotional swings. But despite the ups and downs, the long-term trend is undeniably upward, suggesting a bright future for Bitcoin. With new highs come strong opinions. Bulls are calling for $150,000 or more, citing ETF inflows and global demand. Bears warn of a bubble, predicting a sharp crash and pointing to extreme market sentiment. Everyday investors are caught in the middle, torn between taking profits and holding on for more gains. FOMO is everywhere, tempting newcomers to jump in at the top. Social media is a mix of wild optimism and cautionary tales. The emotional roller coaster is real, and making smart decisions is harder than ever. Navigating this market takes nerves and a plan. So, what's next for Bitcoin? This is the million-dollar question on everyone's mind. Will it continue its upward trajectory, or are we due for a correction? The future of Bitcoin is shrouded in uncertainty, making predictions a risky game. If institutional inflows continue, with major players adding Bitcoin to their portfolios, it could provide a significant boost to the price. And long-term holders don't sell, maintaining their conviction and refusing to be swayed by short-term volatility. The rally could keep going, potentially reaching new all-time highs. The supply shock, combined with sustained demand, could create a powerful upward pressure, but risks remain. The cryptocurrency market is still relatively young and subject to various external factors. A shift in global economic policy, such as changes in interest rates or quantitative easing, could impact investor sentiment and capital flows. Regulatory crackdowns, with governments around the world grappling with how to regulate cryptocurrencies, could stifle innovation and dampen enthusiasm. Or a major hack could trigger a sharp correction, eroding investor confidence and leading to a sell-off. The crypto market is famous for sudden drops, even in bull runs. These corrections can be swift and brutal, catching many investors off guard. Chasing the price now is risky. Succumbing to FOMO, fear of missing out, can lead to poor investment decisions. Dollar-cost averaging, a strategy of investing a fixed amount of money at regular intervals, or waiting for a pullback, might be wiser, allowing you to buy Bitcoin at a lower price. The potential rewards are huge, with Bitcoin having the potential to generate significant returns for investors, but so are the risks. It's crucial to understand the potential downsides before investing. No one can predict the future. Market sentiment can change in an instant, influenced by news events, technological advancements, and regulatory developments. So do your own research and never invest more than you can afford to lose. Responsible investing is key to navigating the volatile world of cryptocurrencies. Bitcoin's journey to $123,000 was wild, filled with dramatic price swings and unexpected twists. The next chapter? What will it hold for Bitcoin and the broader cryptocurrency market? It's anyone's guess. The future remains unwritten, full of possibilities and potential pitfalls.